Good morning, and thank you very much for joining us here on the Market Day Report. John Jenkinson here with you to talk about the markets, and also to visit with us, Rich Nelson, Allendale Incorporated. Good morning, Rich. Happy Friday. The grains got off to a little bit of a weaker start on the overnight trade, and so now going into the weekend, what do you see in the cards?
I think right now a lot of people probably pointing out that yesterday's reports more or less confirmed what a lot of the private trade had been discussing for quite a few weeks. Now, biggest issues, I think, for the trade in the next few days, and certainly for today as well, is wondering whether USDA's kind of aggressive new crop soybean export numbers are realistic, and maybe that's one reason why we're having a little weakness here on the soybean side here today.
Let's take a look at how we kind of wrapped up the overnight trade and are going into the day trade. We'll start here with the corn market. And just about all night long, this corn market was in negative territory from the very beginning. It's July corn this morning going into Friday down 3 1/4 cents at 3.98 3/4. December corn down 2 3/4, 4.16 3/4. July soybeans down 8 1/2 at 10.12 3/4. November soybeans down 8 1/2 at 10.22 1/2. July Chicago wheat down 5 1/2 at 5.01. July Kansas City wheat down 4 3/4 at 5.22 1/4. July Minneapolis wheat down 2 1/2, 6.06 1/2. And July cotton down 25 at 84.31. So, Rich, the fundamentals really didn't change a whole lot. It was just this report. So now the bulls have got to find something new to look for if they're going to try to bounce off of where we're at first part of next week.
I think that's right here. In the short term, we have some discussions about, of course, delayed planting and things like that, which will be obviously with us through next week as well, as long as this current forecast holds. So these issues will be there, but I don't know if it's going to be enough to get much of a good rally here past this point. So definitely USD fulfilled a lot of bullish hopes, certainly on the corn end, and now maybe the market, like you said here, needs some type of new juice to get us to this next wave up on pricing.
How much of the U.S. dollar factors into all of this, do you think, Rich?
Yeah, I think it is something to look at here. I think for us in the grains, we probably don't give it as close of or as important of a focus as we probably should, but certainly it is something to look at, especially when we're talking about these differentials between U.S. and Brazil regarding pricing. So I think that's a very good point here to look at there too.
What about corn? When we look at the charts, is there some place on this chart where we can really find some good support here that the market may have an opportunity to rally off of?
Yeah, I think in this case, we're looking at any type of small pullbacks and finding moderate support here. And realistically, we don't have major support on this uptrend until another 10 to 15 cents lower from here. But I'm not sure if we're going to hit that point. I think there's still a lot of general momentum built up in here, and possibly this $4 range at the very worst for December corn might be the last support point here.
Well, it also kind of depends on how you read that WASDE report, and if you take that and you also factor in what's going on in the safrinha corn crop in South America. I was reading a report here this morning that said maybe it could be reduced as much as 12%, and I have heard figures as much as 20%.
That's certainly right. And also, we got to point out, the next 1 to 2 weeks do have some maybe a turn to maybe slightly more normal rainfall, which may be helpful for this crop down there. But as it stands, certainly the past 30 days, 60 days actually have been a little tough here for that crop. And hopefully USDA's movement down in the Brazilian corn crop estimate reflected that here.
Rich, is the wheat market basically a drag on the other two grains right now?
Maybe psychologically it is here. USDA might have just a little bit more to add on and to the ending stock side for old crop numbers. But, I think on the wheat side here, maybe some of this discussion about large supplies around the world, I think they're very valid and certainly shown by USDA's U.S. wheat production number higher than last year, despite the Southern Plains drought. So that's one issue, which probably is a moderate problem for us here.
Rich Nelson, Allendale Incorporated, on the line with us, and we're going to take a break. When we come back, we're going to talk about the livestock trade. That's straight ahead, so stay with us right here on the Market Day Report. Continuing our conversation now with Rich Nelson, Allendale Incorporated in McHenry, Illinois, here with us. Oh, there was quite a little rally yesterday in both the live cattle, the feeder cattle, and you could include the hogs with that as well.
exactly right here. I think the trade's kind of pointing out that maybe some of the numbers on USDA's balance sheet, certainly on the meat side, weren't as bad as the trade was maybe bracing for. In fact, USDA cut a lot of the second and third quarter beef production supply that we had talked about. That was a concerning issue. In fact, they went from a 10% year-over-year gain for beef production for Q2. Gosh darn, that's now 5% higher than last year. So for USDA, pretty aggressive cut, and certainly the market probably needs to realize that here.
What about the exports? You know, that kind of got overshadowed and maybe a little bit lost in all of the information that was coming to the market yesterday. But we did see quite a reduction in both beef and pork exports in this last export sales number.
Exactly right. Those weekly numbers here were slightly disappointing here, no doubt about that. And in fact, on the beef side, it was the lowest sale in 7 separate weeks. And also on the pork side, this was the lowest sale in 13 weeks. So on both those, maybe a little disappointing tone. And like you mentioned, the U.S. dollar is an issue to look at here. Also, we can't ignore that we have some NAFTA deadlines coming up very soon that hopefully we'll get some negotiations wrapped up by here.
So is this seasonal, or is it more trade concern related, do you think?
Yeah, I think both of those. In fact, on the seasonal issue, with these numbers, this is a seasonal slump in exports. It does happen. It's not that surprising, but probably for right now, as we're on the beef side looking at the year's larger supply flow move through the market, it's something that we don't want to see. And certainly on the pork side, where we're arguing that this is a tighter market as we go into summer on the supply end, we certainly want to see some type of extra boost there.
Rich, I want to get your thoughts on the retail cutouts for both beef and pork as we recap what we saw yesterday afternoon. You know, yesterday at midday, both of those were higher, and then yesterday afternoon at the afternoon report, the choice beef was up 11 cents. The selects were up 19 cents. Over on the pork side, it was the carcasses higher, loins higher, the hams just a little bit weaker, but the bellies higher. So is this retail cut market for both the beef and the pork still positive long term?
Yeah, I think the big picture certainly is. Yesterday we had this discussion on this program about the choice select spread and the lack of available product on the choice end, which many in the market were scrambling for. So I think that's going on here. And also on the pork side, we can't ignore the fact that we've got a $3 jump so far this week with the wholesale pork. So certainly surpassing the past 3 weeks of numbers of minor gains. So I think on both ends, we are seeing a moderate resurgence right now in end-user demand here.
And are we starting to close that gap between the futures and the cash in the hog department?
And I think we are certainly starting to do some of that, especially as we now have cash hogs certainly on board. Looks like these futures might need to see a little more strength here in the next few days. So that's certainly a positive sign there.
Rich, is the trade talking about concerns about consumption if we continue to see oil prices and gasoline prices continue to go higher?
This is something which has been discussed quite a bit. In fact, it's not just that. It's also the fact we're putting out, the largest, I want to say, beef supply on a per capita basis since 2000, year 2000, I believe, if I remember right. So certainly you're right. Some concerns about not just consumers spending some money here, but also the amount of meat that we're pushing on their plate here.
Rich Nelson, Allendale Incorporated, here with us, and we talk to him at this same time each and every morning.